I'm starting to get some real deja vu from 2022. Stocks have been on a real roller coaster. Nobody quite knows what's happening with the global economy. And to top it all off, I've currently got COVID. So not exactly the best kind of nostalgia. Now, among all of this market turmoil, we've been asked the same thing time and time again over on our Instagram page. Is now a good time to start investing? And that's what I'll be answering in this video. Now, whilst I will be looking at the market right now and thinking about the pros and cons of starting to invest today, most importantly, I'll talk about the real things you should be considering before deciding whether or not to invest. Because I promise you, it has nothing to do with Trump or tariffs or whether stocks are soaring or crashing. But let's start with the reason why you might want to start investing today. I guess the simplest reason why it might be a good time to invest now, and I think why we are being asked about it quite a lot, is because share prices are substantially lower than they were a month or two ago. That's despite the fact that the day before I'm recording this, the US stock market had its third best ever day in history after Trump announced that tariffs would be paused for 90 days. Which, you know, was nice for my portfolio, but stocks are still very much below where they were when he took office, at least at the time of this recording. Who knows where they'll be by the time this gets released a few days later, because the moves in the market have been so dramatic recently. But anyway, put simply, I think that's the big reason why investors might want to consider and are considering investing right now. They are buying stocks at a substantially lower price than they were just a month or two ago. But this fall in stock prices hasn't just happened out of nowhere. So let's quickly touch on the downsides of investing right now before we get into what you should really be looking at before you consider investing. Now, these drops haven't happened for no reason. Stocks have been tumbling because Trump is launching a trade war with the world, putting tariffs on pretty much every country and territory, even islands that are only inhabited by penguins. Because, as I think we all know, Pingu has been taking advantage of the United States for way too long. Now, I'm not going to dive into it in this video, but in my view, these tariffs would be objectively very bad for the US and the global economy, which is why stocks hate them and why the market tumbled on their announcement and news of their implementation. Because tariffs will have a very real impact on businesses and the economy. They cause the cost of goods to increase, meaning prices will probably rise, meaning inflation will hit the US. But it can also cause companies to go out of business. For example, if they're having to pay 50% more on the shoes they manufacture outside the United States, but then they can't raise prices by the same amount. You might say just manufacture in the US. But the problem is, that might be more expensive, and the US doesn't have that specialization that these other countries have because they've been manufacturing these goods for US consumers for years and decades. So the choice of businesses is either what? Manufacture in the US in places that don't exist, or are either way more expensive, or now buy from abroad but have to pay so much more because of tariffs. Either way will lead to price increases for American consumers and just put so much more risk on businesses and the economy. So you have these things that could cause inflation to rise, unemployment to rise, and that are expected to result in lower economic growth. Given that businesses and share prices are, in theory, a reflection of the profit that companies are expected to make in the future, bringing in a policy that will likely cause profits to fall in the future is a bad thing for share prices. So I think the biggest downside to investing right now is the fact that tariffs are still there in the background. They are being used as a high-stakes bargaining chip. Don't get me wrong, I don't believe that any meaningful tariff will go into effect for any meaningful length of time. The problem is, no one knows exactly what Trump will do next. It's not in his interest to crash the US economy, which is why I'm not too concerned, but you never know with Trump. However, I don't think this uncertainty should be a reason not to start investing. I began investing at the start of 2020. Since then, we've had a global pandemic, broken supply chains, sky-high inflation, war in Europe, and now Trump's tariffs. Those are all unprecedented events in just the last 5 years. And by the way, I am so tired of the word unprecedented because I feel like I've faced way too many unprecedented events recently, so I feel like the word has kind of lost its impact. But anyway, despite all this, my investments are still in the green, even after this latest sharp drop, which would not be the case if I avoided investing every single time there was uncertainty. So that brings me to the actual important part of this video. You shouldn't be deciding whether or not you want to start investing based on what the stock market is doing on any given day. When you make that decision to start investing, it should be with the plan to do so for decades. So let's go through the real things you should be considering when asking the question, is now the best time to start investing? Firstly, do you have an emergency fund? And by this, I mean, do you have some cash savings set to one side that you can easily access for things like car repairs or a leaky roof or even losing your job? Emergency funds are so important because they allow you to ride out the ups and downs of the stock market. You don't have to rely on that money that you have invested anytime soon. Experts recommend saving up an emergency fund of 3 to 6 months worth of essential living costs. That can be quite a big task, so I personally would aim to save up my first £1,000 and then continue to build that emergency fund whilst also starting to invest. But it can depend on your situation. If you have an unstable job or a number of dependents, then you'd probably want to try and get a larger emergency fund before you start investing. The next thing to consider is whether you have any high interest debt. Now, the global stock market has returned between 8 to 10% a year on average over the past few decades, although the actual yearly return can fluctuate quite a bit. So that is not guaranteed. However, if you have a loan charging you 15% interest, you can guarantee that you will have to pay that interest. So it makes far more sense to get that credit card or loan paid down before starting to invest. Now, when it comes to investing, you need to have a long-term mindset. Ask yourself if you are happy leaving your money invested for 3 to 5 years, but ideally much longer. Because despite what it looks like on the news or on Wolf of Wall Street, investing is not some get-rich-quick scheme. It's something that can grow your wealth over decades. As we've seen recently, stock market drops can be fast and unexpected, and having a long-term approach gives you a greater ability to wait out any drops and allow your investments to recover. Now, you also need to consider whether or not you feel confident with what you're investing in. This isn't saying that you need to be an expert, just about if you understand the basics. For example, when we first started investing, we dove headfirst into risky individual stocks. And that came back to bite us. You know, we walked before we could run. That's why, if we were to start from scratch, we'd probably put most of our money into a global index fund. In fact, even today, the largest investment in my portfolio is this global index fund that spreads my money across thousands of companies around the world. I'd probably make that the cornerstone of my portfolio, maybe like 80%. And then if I wanted to also add individual stocks, I'd make them a smaller part of my portfolio until I got more confident. To be honest, that brings us quite nicely to the next point. Can you commit to investing regularly? For example, every single month when you get paid, no matter what. It is so easy to have your confidence shaken when you first start investing, especially during turbulent times like these. So it would be a real pain if every single month or week or day you were having to make a brand new decision of, should I be investing right now? Sometimes you might get it right, sometimes you're gonna get it wrong, and in fact, most experts cannot accurately predict the right time to invest on a regular basis. So we find it so much easier to say, look, we're investing a portion of our salary every single payday, regardless of what the market is doing. And this approach has been shown time and time again to be a great way to build long-term wealth and great habits when it comes to investing. So this is the penultimate question that I think you need to ask yourself. Are you ready for the ups and downs? Particularly the downs, because drops do happen. They have always happened. And yet the stock market has still delivered fantastic returns for long-term investors over decades. These dips and this volatility is simply the price you have to pay for admission to the stock market. And if you're aware of this, and prepared for this before you start, it won't make it easy when it happens, but you'll find it much easier than someone who just expects their stocks to go to the moon. And importantly, you won't be scared out of the market when it happens. Okay, this is the last question to ask yourself before considering whether or not now is the right time for you to invest. And in my mind, it is the most important. Do you know your why? Why are you investing? What are you hoping to gain from it? Is it financial independence? The ability to retire early? Or maybe to take a part-time job in the future so you can spend more time with your loved ones? Or maybe it's to know that you have your money working for you in the background so that you know you can enjoy life right now. Because when stocks are falling, remembering why you are investing is such a powerful tool to stop you from panicking and selling. If it's simply to make money, that's really not enough to stop someone from panic selling. You need to know your why, this North Star, this goal that you want to achieve. Because that's what will help you to stay invested for years and years and years. Now, I know that it's not easy to start investing with confidence. I made plenty of mistakes at the start of my investing journey that ended up costing me thousands, if not tens of thousands of pounds. And that's why myself and Andrea created a 6-week roadmap to help you start your investing journey in a much better way than we did. We've already helped over 2,000 people break through the noise and jargon of the world of investing. And if that sounds like something you'd be interested in, you can join the waitlist for our next cohort via the link in the description of this video. Or you can simply head to our website to learn some more. So to summarize, it is really natural during volatile times to be wondering whether or not now is the best time to start investing. But I hope this video made one thing clear. The best time to start investing has very little to do with what the stock market is doing. And it has everything to do with you, your goals, your financial position, and whether or not you are ready to commit to starting your lifelong investing journey. And if you'd like to see more videos like this as you go along your investing journey, don't forget to like and subscribe to this channel. And feel free to drop any questions you have down in the comments. Thanks a lot for watching, and I'll see you next time.